Hi there, welcome to this week's market analysis. So as usual, let's take a look at what has happened for the past week and what are some of the events that you want to take note of for this coming week. And we'll look into the charts and share with you the overall directional bias and some of the opportunities that you want to keep an eye on. Now over here, we can see last week we have a couple of interest rate, central bank rate statement coming in. So for RBA, we did see it hike it to 2.35 from 1.85. In terms of Bank of Canadian, right, we see another rate hike as well from 2.5 increasing to 3.25. And ECB did a hike at the same time as well from 0.5 to 1.25, right? So all this wasn't much of a surprise, but it's very much in line with the general consensus. And overall, we're probably going to see a little bit more hikes from the various central banks as well. Okay, and of course, to end off last week, we have the Canadian labor market coming in, and the data isn't as good as what the general consensus have. So employment actually dropped in Canada. We have a negative 39.7 thousand, and unemployment rate actually rise to 5.4%. Okay, obviously this is something that is not an immediate concern, but is showing sign that perhaps we are probably going into a recession in 2023 if the labor market continue to weaken, right? Now let's take a look at this week over here. On Monday, we do have the pound GDP coming in. Okay, and Tuesday we have important data from the US, which is the CPI as well as core CPI. These are actually inflationary data, so that's going to have a major impact in the market if we kind of get a surprise element. And on Wednesday we have the pound CPI, again a very important data over here. So this is a year-on-year data, and we can see that previous data came in at 10.1, which is basically the annual inflation rate in the UK. So this time around, the expectation and forecast is also maintaining at 10.1. But if we can get something below 10, then it starts to show that alright, inflation pressure is easing. Perhaps we will not see so aggressive rate hike from Bank of England. Okay, so keep an eye on that. And then on Thursday, we have the Aussie labor market as well as the US core retail sales coming in. This is also important because it's going to give us some sign into not just the inflation aspect, but whether it's starting to show sign of recession. Because if retail sales and core retail sales starts to pull back, perhaps into a negative territory, it's an early indication of a potential recession coming in, maybe in 2023 or going forward into 2024 as well. Okay. So do take note of some of these risk events if you're actively trading in the market as well. Now with that, let's jump into the charts. So over here, as usual, we're going to take a look at the dollar index first. First up over here, we have the dollar index coming down very strongly as an impulse as of last Friday. Okay, I would say even last week. So right now we are holding a bearish directional bias as long as the dollar maintains below 110.80. And from an Elliott Wave perspective, we are expecting at least one more push after a decent correction. So this week here, perhaps at the beginning of the week, we might expect the dollar to strengthen a little bit correctively towards the Fibonacci of 50 and 618, somewhere around 109.60 to 109.90. And if it does develop into a very corrective structure, then that would present a decent sell opportunity where we can put our target at 107.60. Right? So this week here, at least for the early part of the week, perhaps we'll see a little bit of a pullback on the dollar. And then for the next part of the week, we're going to look for sell setup for the dollar index. Now that's going to translate to some of the major pairs over here. For example, euro dollar as of now is kind of inverse, a little bit on an inverse relationship with the dollar. So if the dollar were to weaken, then there's a good chance euro dollar will continue higher. Now last week it did push up towards the previous mini high around 1.0090, and we kind of get a little bit of reaction here, right? So moving forward, at least for the first part of the week, we want to observe and see if we can get a decent corrective structure pullback towards the 50 and 618 Fibonacci, somewhere around 1.0020 to 1.00, which is the parity level. If the market were to develop a corrective structure over here, then we can expect more upside, and that would bring the next target towards 1.0360, right? So we're going to look out for buy opportunity in the euro dollar, at least going to the second half of the week if we can get a corrective structure over here. Okay, so our directional bias for the euro would be bullish. And then on pound dollar over here, from an Elliott Wave perspective, we can clearly see that in terms of the bigger count, we have a 1, 2, 3, 4, 5, and within wave 5, we have a clear 5-wave structure to the downside as well. And what's nice about this is, of course, wave 3, the bigger count of wave 3 and wave 5, we have a divergence. And of course, the internal count of wave 3 and wave 5, there is a divergence as well. And as of last week, we do see a little bit of a reaction to the upside. The market took off the high around 1.1610, which is the previous wave forward here. So moving forward into the week, as long as the market is able to maintain above 1.1460, we're going to expect more upside. Okay, so on the pound dollar, our directional bias for the week is going to be bullish. Now on Aussie dollar over here, we can see a very nice 1, 2, 3 wave structure, and the market kind of reacted off very nicely at the bottom at 0.6700. So right now, we have a very clear impulsive push. However, the market is still actually maintaining below this trendline structure. So going into this week, if we can get a decent corrective structure pullback towards 6780 or even 6770, we might be able to look for buy setup. As long as the market maintains above 6700, we can look for a buy targeting 0.7005 and 0.7135. And our directional bias for Aussie dollar for the week is going to be maintaining a bullish bias as long as this low is there. Right, so that's on the Aussie side of things. On the dollar Canadian, we have a very clear impulsive move to the downside, breaking not just this mini double top neckline, but also breaking below this trendline structure over here. So this gives us a very clear directional bias for the dollar Canadian. We'll be maintaining a bearish view, and as long as the market maintains below 3205, we're going to look for sell, and ideally we're going to want to see if we can get a corrective pullback towards this zone around 1.3095 and 1.3120 for a sell setup. Right, so dollar CAD directional bias is bearish. Now on dollar yen, what I have over here is we are kind of expecting a wave 4 pullback after a very clear 1, 2, 3 very impulsive move. We kind of expect a little bit of a pullback and then perhaps one more move up to complete that overall 5-wave structure. And short term here, if you're looking for intraday setup, perhaps later part of a week, we might get a little bit of a sell trade over here if the market develops correctively. Okay, we can get a short-term sell opportunity with a target at 139.90. Not really a huge move, but if you're looking at short-term play, I think that's where the direction you might want to be focusing on, right, on the downside over here. So that's on the dollar yen. In terms of gold, it's a little bit tricky right now. There are various scenarios that potentially can still develop, but for the primary scenario over here, we can see that this can be a 1, 2, 3. This development here looks a little bit corrective in nature, which opens to the possibility that this can still come back down, break this low before the potential reversal. However, there is also the possibility that this is a leading diagonal from an Elliott Wave perspective, and we get a decent corrective structure development like that. This can continue higher from here, and 1688 can become the low, right? So for gold, over here, for now, we're still holding on to a bullish bias. I think the question is whether we're going to look for entry around here, or we're going to wait for the market to come down a little bit more before we look for the buy setup. But the long-term play on gold over here is bullish. So you know, according to your strategy, to your trade plan, you might want to have a proper entry technique to get involved anyway. Okay, lastly over here on S&P overall market, we did get a decent bounce as of, you know, end of last week, especially after a very clear 1, 2, 3, 4, 5, with wave 3 and wave 5 here developing a divergence, and wave 5 looks like an ending diagonal as well. So last week we did kind of expect a little bit of the relief rally. It's still too early to say whether this low here at 3882 is the bottom, but at least for this week here, we're expecting a decent correction and another push up. So if you're short-term play on equities or indices, okay, you can look up for buy opportunity if the market provide us a corrective pullback with a potential target back towards 4100 and 4150. Alright, so that's all for me for the week. All the best to your trading, and gentle reminder over here to always manage your risks, and I'll see you guys in the next one.